Hello, this is Jordan. This video is being recorded on Tuesday, February 13th, 2024. Thank you so much for tuning in today. In this video, going to talk about the setup for a huge rally in gold stocks, something that could be similar to 2008, 2016, even 2020. Don't roll your eyes. There's a lot of good reasoning here. Let me get right into it. So, first things first, let's talk about the price action in GDXJ and breadth indicators to inform us as to how oversold this sector could be. Now, looking at GDXJ and the price action, there is some support around 30.50, but I'm looking for much stronger support and a potential bottom, in this 26-27 area. This is the strongest support. Now, these are custom breadth indicators, and so this data has not been updated for 2 days. I'm going to update it a little later for subscribers. So it does not include today's over 6% decline. So I'm guessing that this is a percentage of GDXJ stocks that close above the 20-day moving average, 50-day moving average, and 200-day moving average. I'm guessing that these here, they're probably at zero. This here could be at 10% or even lower. Now, these vertical blue lines show basically when these three indicators are around zero, and we also get a blowout in the number of new 52-week highs. Now, the blue, that's a 10-day moving average that smooths the data. So this was 12% coming into the week. So this could be, this could have hit 30%, maybe even higher today. So when you see spikes in new 52-week lows and these things around zero, that tends to signal a bottom. But the real question is, are we setting up for, is it going to be another rally like this, like this, like this? Are we setting up for a bear market rally or, boom, a big rally like this? Or even one like this, which was pretty good, but, not... obviously pales in comparison to 20 and 16 and 2008. So we know that at some point the sector is going to come into a significant low. Now, next day or two, because we're really, really oversold, we're probably going to get a bounce. That's my prediction over the next day or two, or maybe over the next week or two. Who knows? Maybe this could bounce and rally 10% here. But as is right now, sector is really, really oversold, and in the coming weeks and coming months, I'd love to see it get even more oversold to the point where essentially we know that there's going to be a bottom. Now, moving on, let's talk about valuations and sentiment. This is from an article I wrote 3 weeks ago. This valuations data is old. This is enterprise value to EBITDA. If you watch The Sopranos like me, you heard Paulie Walnuts talk about the importance of EBITDA. But it's this valuation is a little similar to price to cash flow. So this is light blue, mid-tiers, seniors in darker blue. Don't make fun of me, I'm colorblind. And this is actually a year old. Now, since that point, I think valuations have gotten even lower. They're even more compelling from a contrarian standpoint. But even at that point, at the end of 22, this was really close to an all-time low, other than the COVID spike. Seniors, 2013, 2015, 2020, those were the low points in the valuation. So again, this is a year old. Both of these are probably close to all-time lows at this point. This one, 6 or 7 months old. Last July, so maybe, what is that, 7 months? So this shows the premium or discount to net asset value. Now, seniors, I really don't care that much for this valuation. This is a better valuation for juniors who are not cash flowing. They're not generating cash flow or making money. Seniors are. So this type of valuation I prefer for seniors and mid-tiers because they're producing, they're making money. Something like this I think is better for juniors. So this, 2008, 2020, that shows how bombed out juniors were on a valuation basis. This is 6 or 7 months ago. This is probably down here at this point, close to an all-time low. So really compelling for valuations. Sentiment, you can pause the video and read what everybody's saying. I did a video on gold stocks 2 or 3 weeks ago, and some great comments here. But it just tells you the state of the sector. And again, these are things that we see when we're coming into a major, major bottom. Now, last thing, and honestly the most important thing, as I get a sip of water here, is the gold price. Because if we look at, and if we think about those huge rallies after 2008, after 2016, after 2020, how did the gold price perform? You basically had 30% rally. 2016, gold went from 1050 to 1375 in, what was that, 7 months, 6 months, something like that. 2008, after that bottom, gold goes from 700 to 1,000. Almost really a 40% rally in 4 months. And what happened in 2020, the COVID crash, from the 1400s up to almost 2100. So that was close to or about 30%. So if you look at those 3 points where, I'll just go back here, where you had rallies like this. I mean, you 16, 20, and then 2008's not on here. But you had those rallies when, I mean, obviously you had these conditions, valuations and sentiment, they're in the toilet. But you had the big move in gold. You had a 30% rally in gold. So if gold does something like this, and you get that move from 1900 to 24 or 2500, that is going to give you the huge rebounds that you saw in those years. I'm not saying it's imminent or it's going to happen, in the next 2 weeks or 2 months or even 3 months. But sometime this year, the market is setting up for that. Where if you get this move in gold at some point this year, you're likely to see that huge move in minors and juniors as well. So I know this is probably the wrong day to talk about it, but we have to start thinking like contrarians at this point. Doesn't mean the sector's a huge buy right now, or it's going to, again, doesn't mean it's going to start the next 1, 2, or 3 months. But it's setting up for, at some point later this year, where you're going to get that kind of a rally in the sector, just a massive, epic rally. Let me know what you think in the comments. I'll talk to you guys again in the next video.